Hey everybody, David Chang here, founder of The Art of Thinking Smart and The Art of Smart Money. Really glad you can join me for Investing 101, where I cover the foundational principles of investing. If you're new to investing, this is a great place to start. If you have experience in investing, this presentation will also be good to brush up on your knowledge and information. Some disclosures. Now, this may seem a little scary. If you do want to read through all of it, please feel free to pause this at any time. But the takeaway here is that this is for informational purposes. I'm not making any investment recommendations. And also, there are risks and some drawbacks inherent with investing. There are some benefits as well, but part of investing is understanding how your personal goals, your risk tolerance fit with your investment philosophy. And no one investment product or strategy is good for everybody. Again, it's very personal and you want to make sure that it is right for you. This is what we'll cover in this presentation, and I'm breaking them up into different videos. This is the introduction, then the next video, basic investment types, then we'll have one on basic investing principles, and then we'll finish it off with knowing yourself and your goals and some conclusions and next steps. So here's the introduction. Investing. What is the big deal about investing? Why should people invest and how do you get started? And that's what I'll be covering in this presentation. Now, one little trivia here. Do any of you know where the name Wall Street comes from? Now, this is kind of a little fun trivia, but it actually dates back to the late 1600s when the Dutch settled Manhattan and they built a wall to protect themselves. Hence the name Wall Street, because where the street currently is generally the site where the wall was built. In our presentation, we're going to cover investing from the ground up, and we'll talk about basics of investing and also the most common types of investments. So, what is investing? Now, essentially, investing means putting your money to work for you, and here's what I mean by that. Growing up, many of us are taught that you can only earn an income by getting a job or working for a wage, and that's what many of us do. However, the problem with this scenario is that in order to make more money, you need to work more hours. And even if you wanted to, there's only 24 hours in a day. And if you know what the other videos that I've given and the articles that I've written, I'm very big into having a very balanced lifestyle. And so if you want to have good time with your friends, your family, and have quality time with them, you cannot spend your entire life working. So what can you do to earn more money? Well, we can't get more time and we can't duplicate ourselves. So what we can do is put our money to work for us instead by investing. A simple way to put it is that we can't trade time for more money, but we can trade money for even more money. And that's what investing is. This maximizes our earning potential whether or not we work more hours, whether we earn a raise or a promotion, or we look for a higher paying job. Now, there are many ways to invest and many types of investments. We have stocks, bonds, CDs, mutual funds, and many more options, some of which we will discuss later on in this presentation. Now, I also want to talk about what investing is not. Investing is absolutely not gambling or get-rich-quick schemes. Some people may treat investing like gambling. They try to bet on the ups and downs in the market, or they invest based on these hot tips. I'll be honest with you, I've been in this industry for a long time. I've had, thousands of clients. I've worked with, so many of them. And every single time a client came to me with this hot tip stock, in fact, I believe, and to be honest, I am thinking right now, none of them panned out the way they were supposed to. I certainly do not encourage this kind of investing because it doesn't work very well. And if you're a day trader or trying to be one, I wish you all the luck. When you look at the statistics, 90 to 95% of day traders lose money in the long term simply because of transaction costs, the taxes they have to pay. And this doesn't even include the time. One of the things that studies have shown also is that if you're a big name firm like Goldman Sachs, Morgan Stanley, all those huge financial companies, JP Morgan, they have these computers, the trading desks, that are a split second faster than everybody else's. And why is that important? Is because when the rest of us people on Main Street start trading, Wall Street sees a trend, and they're called smart money. That's the term that we use for the smart money on Wall Street of when they go in and out. And they do a lot of it based upon the decisions that Main Street makes. That's why the deck is stacked against us. So it's very important that if you decide to day trade and you believe that you can make money that way, just be very careful that you don't lose too much money, because investing is a net zero sum game. What does that mean? It means if somebody wins in investing, somebody else loses. Right? If you watch the movie Wall Street, the first one, the character Michael Douglas, right? He talks about that, is that somebody loses investing, somebody wins. And more often than not, it's Wall Street that wins. So that's why it's important that instead of trying to fight against them, right, work with them so that you can build wealth and financial independence. Long-term investing requires careful thought, analysis, and discipline, and a good investor doesn't act on hunches or emotion, but instead weighs the pros and cons of every decision. It's important to understand that there are no guarantees in investing, and risk is always with us, but I'll talk about some strategies how you can minimize those risks. Should you invest? Right? Long-term investing offers some of the best opportunities to grow wealth, fight inflation, increase personal freedom, and help ensure a comfortable future for ourselves and our family. And in my opinion, it's one of the only few ways that everybody can be on the path towards building wealth and financial independence. Investing is also becoming something of necessity for most Americans. And if you saw in some of my Smart Art of Smart Money videos, I showed you the debt that most Americans are in, but also the debt of our government. So it's going to be very difficult for people who are under the age of 40 to really count on Social Security when they're about to retire. So if we can't rely on the government, we really have to make sure that we are prepared ourselves. The days when everyone worked the same job for 30 years, retired with a nice pension, they're not there anymore. They're gone. And we're not even sure, and as I mentioned, how long Social Security will last. So for most Americans, and even people who are listening from overseas, investing may be one of the best ways to build wealth, become financially independent, be financially free, retire comfortably, and maintain the lifestyle that you want to live while you're retired, or even if you want to retire early. Investing is one of the best ways to do it. Having said that, again, it's important to remember that investing involves risks, and positive results can never be guaranteed. So you should invest. Everybody. I'll say that again. I believe everybody should invest. Now, it may sound silly to some people that, oh, you know what, I'll invest when I have money. Yeah, well, sometimes, yes, you need money to invest. But even if you're able to save a little bit amount, I think anyone in every category should invest. Children can learn to manage money and invest for college when they're young. I believe that financial literacy is very important. And I think people learn about money a little bit too late. Young adults can open retirement accounts with their first paychecks and start planning for major life goals like starting a family, buying a first home. And adults should begin planning for retirement as early as possible, and after retirement should shift their investing strategies towards ensuring their money lasts them throughout the rest of their life. And I kind of showed in some other presentations that if you live to 65, there's a 25% chance you'll live over to the age of 90. If that's the case, many people may spend more time in retirement than they did working. So I don't believe the greatest risk is losing money in the stock market. I believe the greatest risk is running out of money over the long haul. So because of the fact that, people are living longer, it's very important that you understand your goals, your personal financial strategy that you need, because every investor is different.